Well, hello everybody. Blair Nightingale here. It's time for the Market Monday update. We're diving into the markets here that just continue to rip higher. I like that we're getting to do an update right now because you can see the market here pushing up once again into another higher high, right? Extending that breakout. So the last time we were together, we got to see that this market, obviously, we can look at this week back here is where we were bouncing near that support line, starting to hold that trend. But in this wedge, right, we're always making sense of what's happening on the chart with a technical pattern, which is a fancy way of just saying pattern, right? We go in and especially when we're new at looking at charts and looking at trading, we can come in with this sort of anxiety slash excitement of I want to know what the market's going to do and I want to see if there's an opportunity to place a trade. And we start looking at stock prices and news and options and premiums and hunches and gut feeling and oh, this one's going to pay really well. And what we have to do is we have to stop and simplify every single time. What is happening on the chart? Is there a good pattern? If there's a good pattern, you and I can start to make decisions based on the human behavior that's showing up or the trading behavior that's showing up in the pattern. So you've got this wedge pattern here on the screen, but then we got that breakout follow through, right? The market breaks out, the CPI report comes in last Wednesday, and it's not as bad as expected. Thursday, the PPI report, not as bad as expected, things we talked about last week. And then Friday, bank earnings, which actually continued this week, better than expected. Now, I mentioned the earnings expectations. When you set the bar really, really low, it's not that hard to beat those expectations. So overall, earnings is expected to decline in the S&P 500, but that doesn't mean they won't beat analyst expectations. Also, banks are starting to talk. You're getting a little bit of this conversation out there to say, we may actually get that soft landing after all, meaning the Fed raises interest rates, contracts the economy, shrinks it on purpose, but doesn't trigger a recession. Now, they've never really been able to do that, but they're starting to talk like, well, hey, maybe we're going to do that this time around. Now, we're not out of the woods yet. Nobody's saying that, but starting to raise probabilities that we may not see that much of a recession, even though technically we've been in one. It's just not been something that looks like what we've known in the past. It certainly hasn't been something that's been marked by high unemployment and significant wage loss, things like that. Actually, wage growth continues to be pretty robust. So these are very unique times to be sure. And you can see on the screen, the market is holding up very strongly, getting that breakout. Now, here's the thing, guys. If I change where I'm at here to the 5-day moving average, we're pretty much riding right on that, aren't we? Now, we're not even actually touching it. Now, that's when you know this market is hot. Today, you can even see right there today's candlestick breaking into a new high, surpassing yesterday's wick high. We may not close here on that particular candlestick, but it's pushing past there. And you're starting to see things like, well, the XLF here, this is the financial sector. Now, no doubt this is seeing a nice bump today because a lot of the earnings in that particular sector lately have been quite, I'm not going to say quite strong, but they have beat on expectations for sure. So there's some strength there, and you're seeing that push that sector, the S&P 500, higher. Certainly here, continuing that trend. This is a tricky spot because as you start to see the market extend itself above the 5-day moving average and it just continues to go, you are caught with a tension as a trader that goes, well, the market is very bullish right now. It's very hot. So I would like to take advantage of that momentum. At the same time, the further it extends, the more you may feel like, well, it's reversion to the mean, we call it, right? As it extends further and further out, eventually we know it's going to reset back to the middle, right? It's going to reset and there's going to be some sell off, some profit taking. But we can't guess when that is. The market is strong until it's not. So looking at something like this on the 5-day moving average, watch for the market to just pull back to the low, whatever day it opened. Watch it pull back to that and see if it can get lower than just that open price. Okay. Today, of course, that would be this price right here where that wick low is. And then, of course, from down, further down from that would be the 5-day moving average, which here is at about 4506, right? That 4500 area will be important as that moving average, that red line is going to drop a little bit as the market is going down, but not going down today, right? Still moving up today, opened right at its close of yesterday and is just pushing higher from there. So you're seeing out there stocks like this. I posted this for some of our students earlier today, right? Starting to come off session highs already, but a nice follow through and push on a trend like this. Now, we in the program have talked extensively the last, I'm going to say 6 months, but certainly in the last 2 months on how I manage trades. Getting in and getting out is one thing, but managing profits. Let's say this stock that we're looking at right here pushed from a level of around 1730 up into about 1850. Now, that's about halfway up our range to our previous high. Well, what if it fails from here and moves below the 20-day moving average? How do we move up stops? How do we lock in profits? How do we manage that? Will we have to take an expense on that? That's the thing we really get paid for in trading, is managing that position well. Here, it is pulling back, but it's not done yet. Still very much above support, but showing this stock in particular to say that, yes, the indexes are extended, but there are some great patterns out there that are following through, and we can go and use some specific tools to say, all right, I'm going to take potentially some risk on these patterns, but there are ways I'm going to adjust the risk that I take on these patterns because the market is extended. Now, I'm going to take some, again, potentially, because there's so much momentum in the indexes right now. They're strong, they're looking good. But again, you balance it. See, it's not that one is true and the other isn't. Oh, the market's strong and it's up. Yeah, but it's up and it's extended. So the pullback is, as patterns extend, something we want to at least be aware of. We don't try to predict or guess when it's going to happen, but we manage the risk. Well, how do we do that? Well, some of the things that we do is, first of all, as I said in the very beginning, we go back and we look for a strong pattern. It's a foundation of everything we do, right? We're making buying and selling decisions based on pattern. However, we can use position sizing, stop outs, and management techniques to offset some of the risk that we take when we continue to trade in an environment where the indexes are not necessarily in a really clean pattern and they're not pivoting at a consistent and clear support point, but they are continuing to grind higher. So these are very important things where I always want us to know how market tone and action on specific stocks, I was going to say securities, right? Specific stocks really blend together. We don't want market tone to become this ethereal or theoretical thing that we spend a bunch of time talking about, but really we don't understand how to connect that to action on individual stocks, right? So this is a great example of how to do that. Lastly, heading over, seeing the NASDAQ also doing the same thing, grinding higher, but not as strong here, pushing up today, still above that 5-day, but kind of sideways, right? Doesn't mean that this is a sell-off here just because it's sideways for a day, but definitely showing a little bit of hesitation here. If I see this index, this is the NASDAQ 100, begin to pull back and break down through that 5-day, no doubt, even if the S&P doesn't drop in the same regard, it's going to pump the brakes on the movement in the S&P. So it's nice to look at both, get in here and get a view of what's going on in both of those charts as tech is weighted so heavily in a lot of these moves, okay? As I said, you know, the bank earnings coming out looking good. Consumer spending is a little bit down. So the wage growth is up, but the consumer spend. So it's a little bit of hesitation based on the news. But ultimately today, most of that just feels like noise to me. Index is technically moving higher, not a big pivotal news item on deck, which could actually prove nice for some of the patterns out there where they're not disrupted by high volatility news events. Of course, earnings will continue to grind on, and that itself will really become the news event in the near future. So make sure if you're going out and you're looking at trading a stock, you check earnings, right? So you know when the earnings date is, and understand that overall there's going to be lots of articles about earnings, but we're really looking at the tone of earnings as a whole. If companies are beating estimates, if they're not, and then as we get to the back end, of this earnings season, overall, are the S&P 500 earnings down about what they thought, which I believe they're looking at a decrease of about 7%. Is it more than that? Is it less than that? That may shape up to be a news item in the future as well. That shows us a little bit of where things may be going from there. So quick, simple market update on the S&P 500, a good example of a pattern out there. Of course, you guys can always reach out Market Monday support at tradeway.com. If you have any other questions, appreciate you guys being here with me. And of course, we'll see you